Is the finger pointing, should it be the regulators? Should it be the CEOs? Where does it lie?
Everywhere.
Okay, but that's actually a good answer, because then we're going to fix lots of stuff. Then we're going to fix lots of things if everyone is really at fault. If you were still at the FDIC, what would you be doing differently right now?
Well, I would have handled the takeover, the rescue package for SVB somewhat differently, and I've actually written about that in an article today that's in the Wall Street Journal. And I would highly recommend that the legislators and regulators and so forth consider those reforms that would improve the ability of the FDIC to deal with this kind of situation and actually, hopefully, make it much less likely to happen. But having said that, let me just say that I believe first and foremost this bank was very poorly managed, and so I do place the primary blame at the feet of the bank's management and its board of directors, and that's almost always the case in a bank failure. That's the first line of defense, and that's where this broke down. Could the regulators have done better? Of course, they could have. I believe they were slow to act. Both the state of California, which was the primary regulator, and the Federal Reserve, which was the primary federal regulator, and even the FDIC, which in the end had the authority to go in and deal with it if nobody else was. So I think all the regulators were slow to act, and what I was really shocked by is they allowed this bank to triple in size in 2 years prior to its failure. That's almost unheard of. It's a huge red flag, and all the regulators should have all been in there trying to find out what in the world was going on.
Well, Bill, I thought that was actually quite an interesting line of questioning in the hearing, because apparently there was no head of Fed Vice Chair supervision for a year or so, while we did see this expansion of SVB's balance sheet, which was quite interesting as well. What do you think of the consequence of this is going to be? Do you think that banks are going to police themselves better and slower their loan growth and be more conservative in how they're managing their own assets, or do you think it has to come from Washington?
First and foremost, the banks have to do their job better. And that bank, Silicon Valley Bank, did not do a good job of managing itself. And they should have known better. Other banks have failed doing the same things they've done in the past. First, Pennsylvania in 1979, the largest bank in Pennsylvania being the most notable. It's a textbook case of what not to do. That lesson should have been learned and should have been known by the management and board of this bank, and they should never have done the things they did. Then the state regulator, which was the primary regulator here, was really asleep at the switch, as near as I can tell, and as was the Federal Reserve. And they need to be more on top of things. And the FDIC, and if they're not doing their job, the FDIC needs to be on top of it and getting in there and pushing them to do the right things.
Right. So does that mean that we're going to have more regulation, or do you think that now banks are going to be better at managing risk, but that comes with some other consequences, like maybe their balance sheet's not going to be expanding as much, they're not going to give a lot of loans?
I don't believe we need any more regulation. We have way too much regulation. Every time a problem happens, Congress decides they have to put some more regulation in place, which makes things much more complicated for everybody, the banks, the regulators, the public. And so I think we ought to slow down on rushing to the fire here and throwing more regulations on top of it. It's counterproductive. It's not working. And we need to learn that lesson and start doing the job properly at all levels, and the regulators need to be more aggressive about getting on top of banks that are not doing the things that we know they should be doing, and stop doing the things we know they shouldn't be doing.
So it's not regulation, it's just like, do your jobs better, guys, is basically what I'm hearing from you. So to that point, do you think, with your vast experience with the financial system, do you think that we're going to see banks cut back on lending and be much more conservative?
I hope that banks will continue to lend. They need to. And I hope they are smarter about it. They are more conservative about it. They do the right things. They know what to do. These folks at Silicon Valley Bank, they had to know that what they were doing was not appropriate. I mean, everybody should have known that. I mean, I don't know how you don't know that.
Okay, so you hope that they'll keep lending, but they just have to be smarter about it. Okay, I get that.
Yes.
What do you think the banks, though, should do about their deposit beta? And I say this because I think in the market for investors, there's real question marks as to how these banks are actually going to be profitable in the future. So if they have to regulate themselves a little bit better, if they have to maybe be more conservative in how they're doing that, and then they also have to pay customers more so deposits don't flee, how do banks do all that and still make money?
That can be done. I'm not saying. By the way, we've been talking about banks being more conservative.
Mm-hmm.
That's one word you could use. I would use the word smarter, more intelligent. Don't do dumb things. Don't take undue risks, and have controls in place. I mean, it's my understanding. I may be wrong. That this bank didn't have a chief risk officer for the last year of its existence, or maybe 9 months.
Mm-hmm.
How can you run a bank of that size and that importance without a chief risk officer in place?
Yeah.
How could the board let that happen? How could the management let that happen? I don't know. How could the regulators let that happen?
Bill, do you think we're going to see? Do you think we're going to see issues with commercial real estate in banks for those that haven't managed their risk appropriately, or no?
Say that again.
Do you think we're going to see issues with commercial real estate and banks that haven't managed their risk as well?
We always have to fear commercial real estate. It's one of the risky activities in which banks engage, and we every now and again it gets overbuilt and out of control, and people take losses. So that's always an area of a bank that you should have under tight control. You don't have excessive concentration in it, and you have solid practices in it.
Mm-hmm.
We know what it takes to make good real estate loans, and if you don't do the things that you need to do, you're going to lose money, and that's everybody knows that. We just follow the rules, follow your head, be intelligent.